How do you know which country's currency to buy or sell? It's all about knowing what's moving the markets. Two trading styles used are technical and fundamental analysis. Brian Dolan is Chief Currency Strategist at Forex.com. Kathy Lean is Director of Research at Forex provider GFT.
When it comes to fundamental trading, I like to isolate everything in what we call the 3 M's of trading: macro, micro, monetary policy.
Macroeconomics represents the big picture. As an FX trader, news and politics count.
In FX, front page news can really matter more than business page news. Elections can have a really big impact on the currency market. Geopolitical risk, riots. Whenever these things happen, currency traders always bail first and ask questions later.
Fundamental analysis involves looking at trade relations. Are certain countries complaining about another country devaluing or trying to cheapen its currency to increase its export market share?
Then there's microeconomics. Kathy explains how it relates to your FX trades.
Micro refers to day-to-day economic data, such as the employment reports of countries, the GDP report of countries, the inflation data of countries. All those are things you can trade on a little bit of a shorter-term basis.
The trader or individual investors, they also need to do a fair amount of research on their own. That you can't just read a few days' worth of news and expect to be up to speed on the market.
And then monetary policy. Monetary policy refers to interest rate. In the currency world, the head of the central bank is actually more important than the head of the country. He or she sets the monetary policy or the interest rate direction for the country as a whole.
Lean says if there's one thing you need to know about fundamentals, it's where the interest rates are headed. Thanks for watching Bloomberg, The Educated Investor. I'm Carol Biaggi.